Welcome to Meet the Masters of Insurance webinar series. Good morning. I'm Lawrence Geller, the founder of For Advisors Only. This is the 27th of what we expect to be a great many webinars with Canadians who've dedicated their careers to learning the art and science of insurance sales and service. Webinars in this series are now scheduled through the end of this year, and more are being added to the schedule daily. Over the years, I've observed that every successful insurance agent whom I've met has succeeded differently, even if they're in the same field, deal with similar clients, and even if they are related or in business together. This is what makes the sale and servicing of insurance one of the best careers that I can imagine. It is possible to become a success in our business with diligence, integrity, and experience. With this webinar series, we intend to prove that any type of person can succeed with time and hard, thoughtful work. Our goal is to create a video record for each of these masters of insurance so that some of their expertise and experience will be available to anyone who'd like to learn from. Today, we have Barrington Gray with us. Barrington is Vice President and Estate Planning Specialist at RBC Wealth Management. After 4 years with a leading life insurer, Barrington joined RBC in 1993 to help RBC advisors introduce their clients to a new strategy to build and protect their wealth: tax-exempt insurance. Since then, clients, along with their tax and legal advisors, have come to rely on his expertise and advice as a recognized specialist on insurance-based wealth enhancement and protection. Barrington is an accredited certified financial planner, chartered life underwriter, and family enterprise advisor. He is also a member of CALU, the Conference for Advanced Life Underwriters. Always willing to contribute to the insurance community, Barrington is regularly called upon as a featured speaker at national conferences held by life insurers and affiliated industry associations. Barrington's motto is, "Relationships are the new wealth." He has always believed that nothing is more important and satisfying in life than having strong relationships with his family, friends, with business partners, and with clients and their families. He builds and fosters the strongest possible professional relationships with them, because without that strength, nothing truly great can be achieved. That's why he believes that relationships are the new net wealth, because there is a richness to a strong relationship that is deeply satisfying in and of itself, especially in an age when technology and hectic lives are making us more and more distant from each other. And because a strong relationship is essential, if he is to fully understand clients' hopes and dreams, and thereby deliver on their mission to ensure that the wealth accumulated in a business or a portfolio remains in the hands of the families that created it. Jim Ruta will be interviewing Barrington. We have now booked webinar interviews through the end of 2024, with new dates being added regularly. Over to you, Jim.
Welcome, Barrington. It's a delight to be with you today, and delight to be part of this Masters series today. And I'm delighted to be introducing you, or rather to be working with you on this interview, on this meeting we're having, this conversation we're having today. You know, you and I had a chance to chat for a while before we got to today. I've got some interesting insights as to what you've been doing, and I'd like to just go to that, if that's okay.
Sure.
All right.
Absolutely. So, yeah.
Terrific.
Go ahead.
Well, Barrington, you were pointed away from your previous work in a very unusual way. It really got me going. Would you mind sharing it with us?
I'd love to. But first of all, thank you very much for having me. To be a master is very humbling, and I feel like finally I belong because I'm being interviewed and having a conversation with the Jim Ruta. So thank you for that. Back to my career and being pointed to this career. I was formerly a jail guard at the Dawn Jail. One of my last shifts in my 4th year there, by the way, was taking care of an inmate at St. Mike's. And he was a career criminal, probably 30 years in and out of jail. And I was a young guy, didn't know what I was doing in the sense of where I was going to be going. We had a 4-hour conversation in the middle of the night, probably between 1 and 4 a.m. And through that, he basically was I felt like he was my psychiatrist. And he decided at the end of that conversation, this is not where you're going to stay. This is not where you belong. You could do bigger and better things. You need to get paid in accordance to your efforts. You could make, he said to me, $100,000 a year. I thought, who makes $100,000 a year? But he said it's absolutely possible. Your dreams can come true, and I don't expect to see here not like next year when he potentially would be back in jail. So that was the beginning of the start of this career, and I felt like it chose me because I think he basically said that you're more than just a guard. You need to go out there and spread whatever words you need to spread because people need to hear you, and that was the beginning of it.
Isn't that amazing? Of course, he understood what it meant to be paid according to your efforts directly. So he was able to help you out. So how did you get started then? I mean, there's a bit of a gap, I'm sure, between that discussion and actually getting started.
Yeah, there was a bit of a gap. I went back to because I had 2 courses to finish to get my degree in political science at York University, which I did. But I didn't quit the jail. I decided to take a leave of absence just in case I wanted to go back. But the day I left and started school, I quit at that point. Went to a couple seminars on business building and selling, and I met a gentleman by the name of Bobby Charlton, a legend in this industry. There's his.
There he is,
sales.
Bobby Charlton. That's his cassette. That's his cassette program. Anyway, carry on, Bobby Charlton.
That's when we had cassettes. Yes, exactly. Yes. So he got off a stage. I started speaking to him. We both had history in Jamaica. I wasn't born in Jamaica, but my parents were. He said, you should get in the insurance business. I had no idea what insurance was. He says, I'd like you to meet my son, Jeff Charlton, who at the time worked at North American Life in Toronto, Finch at 44. And I showed up. I took a couple of tests, as we all did back in the day. Passed, of course, and then they sent me out, and I did some joint sales calls with him in the early days, friends and family. Won I guess what they call a national sales award called the Leo Award. I think I did 25 apps in 1 quarter, which is pretty good for a new guy coming out. And I just got the hang of it. And then he said, what else are you going to do? And I said, it's okay. Maybe I should get a suit. A couple suits. So I bought a couple of suits, a blue one and a black one, and set out in July, I believe, 1990, knocking on business owners' doors in Richmond Hill, just north of the city. But instead of talking about business insurance, I talked to them about their own personal insurance. And that was a little bit of a twist. And yeah, event went very well. And I just continued on from there. And yeah, and I'll talk about how I got into the role at the bank in a bit. But
yeah, you know what? I think that's really cool because it's here's something that I think still can work as well, is the idea of you were making calls on high net worth businesses, and something you said particularly interests me, and I think is good for everybody listening. This idea that you're talking to business owners about their personal needs, because of course business owners still have families. And I just think that's a really smart thing to do. Now, you had some background before this, in terms of how you kind of got into that, that your work ethic, I guess, before you did the door knocking. Just a little, can you just explain, what you were doing as a kid and how you got before you got to the Don jail?
Yeah, so I mean, I had 20 different jobs even before I got to the Don jail. I worked insane hours. I remember when I was 17 years old in the summer, I had 3 jobs, one in the morning, one at night, and one on the weekends, where I gave my mother my paychecks to deposit in the bank. First job was delivering papers when I was 11 years old. And I just loved being able to, at least at 16, be able to put gas in the car and just drive and travel wherever I want to go. So I felt that working hard at some point, that mentality would serve me well. So I've always believed in getting paid in accordance to my efforts. So I had listed maybe 11 jobs: a short order cook, I was a forklift driver, I was a truck driver, I was a bouncer. I did so many different things. And but I think not just from a money perspective, you're meeting people and you're creating, developing relationships. And if you, even when I was at the Don jail, there's a subculture of personalities you have to learn how to deal with and survive with. And then you work with other people at the restaurant or at a warehouse, and you just learn different subcultures of individuals. And it was a great opportunity from my perspective to learn and then bring that to this world. But Jim, if you remember, I was speaking to you my first few shifts at the Don jail as a fish out of water, and it was psychological warfare. There were inmates saying things to me who never knew me, but were threatening my life, and they're doing things. And another jail guard came up to me, and to look at him, you thought he was an outlaw biker, handlebar, mustache, anchor tattoos on his forearms. He set me aside and he said, "This is how you speak to these individuals. This is how you walk with confidence, shoulders back, eye contact, learn when to speak, when to shut up." What he didn't know, and what I realized later on, was he was my very first and very best sales trainer. So funny enough, what you can learn from individuals. So when you take that and you go from jail guard to insurance agent, and someone says no to you, like, no big deal, not at all. So I could take
Yeah.
those, I can take no's all day long compared to what I was taking at the Don jail. So yeah, that was a very unlikely sales training method, but it worked for me.
But it is an interesting concept, and I'm really glad you mentioned that, because I was going to ask. But it's very unlikely sales management advice from people who are not sales managers. But this is about how you manage your world and how you handle people and deal with them, how you get that presence. And clearly, you've still got that. I mean, obviously, you've developed that way beyond that. But it's interesting where you can get advice. And of course, that is it's just a great example. I just love that story, because I know that, and I think your point is well taken. If you do the wrong thing in jail, you could get a shiv between your ribs. If someone says no to you, it's not quite as bad. It just isn't the same. So you got started in the business, but where did you find your first clients?
In the business, I found them in a sense from, well, just friends and family. Just it's kind of strange because they didn't know what life insurance was, in a sense of like, you buy this, you die, you get whatever. So we had a lot of resistance, but we had something called a phone book, a real phone book, and I would call some individuals. I'd lock myself in a room. There's no windows in that room. And I would call people, and then you kind of hone your craft. And I learned something years ago, 10-3-1 method. I think it was Granum method. And if I made $1,000 on one sale, it took me 10 calls to make them. Then I got paid $100 per call. So it really didn't matter if I got a no. I was still getting paid $100 because I knew that at some point I'd get a yes and get paid. So those were my first clients. And again, they were friends. Again, mainly family, but you run out of them quickly, and hence that's why I bought a couple of suits and went out and looked for business owners. I knew they had money. I'm an early riser. I knew they'd be in their offices early, and that was the beginning of it.
I love your story, because it's a story of effort and perseverance and like sort of just doing what needs to be done. It's a great lesson for everyone. And like you say, and of course, 10-3-1. I think did you pick that up? Was that something that North American would have told you about? That Jeff would have?
North American Life, yeah.
The 10-3-1.
Yeah.
Like, just this wasn't the book, but here's an example. There it is, the manual, the Granum manual, where 10-3-1 first existed. All of that is such a cool thing, and I think it's important for people listening or watching to say, there are systems, there are things, there are ways. And your assessment of, if I get paid $100 a phone call, if it takes me 10 to make $1,000 sale, is very, very smart, and clearly helped you become the success that you are today. I don't think there's any question about that. Earlier on, before maybe we even got started, Lawrence Geller talked about your brand. Relationships are the new wealth. And I love that. It sounds tremendous to me, but I think there's two questions for me is what do you mean by that? And how does that affect what you do on a day-to-day basis?
Yeah, so that brand came out of that tagline came out of a 2 or 3 hour session with a brand coach. And he basically asked me, so, who are you in the world of insurance? And I had to think back about, you know, really what has happened over the last, say, 20, 30 years at that point, at 20 years at that point in time. I've really built great relationships, but it really came from my father's teaching. And he said, show me your friends and I'll tell you who you are. And then you hear, I think Jim Rohn talked about you're the average of the 5 best people you hang out with. And so the idea is to continue to elevate that and create relationships that work. So it's a little backstory. So when I was 10 years old, I was hanging out with this gentleman and we'd go around on our bikes and we'd go to the local Becker's, which is a convenience store back in the day. We'd go in there and we'd be waiting outside with the bike so no one stole them. He comes out with a can of something called condensed milk you put in your coffee or your tea.
Yeah.
I didn't think we had any money. And I said, you have money? He said, no, I just stole it. You stole it. So I took off, I ran home, waited for my father to come home. And I want to tell him before the cops arrived. I'm thinking all bad things are going to happen. So I had to tell him that this is what happened. And that's when he told me about it. He said he never raised his voice. He just says, show me your friends and I'll tell you who you are. I never spoke to that gentleman again after that day until, think about this, 17 years later, I'm working at the Don jail. Who comes in as an inmate? That kid. I can't make this up.
Yeah, no, you can't. Wow.
So, and I almost was in tears when I saw him, but he's an inmate, and now he's passed away, unfortunately. But that goes to show you that relationships are everything. So that kind of story led me into thinking, okay, so over the years, I've done well at the firm. I need to brand myself. That is the anchor that story is the anchor of my entire personal and professional life. And so when I say relationships are the new wealth, without them, you're broke financially, morally, spiritually, everything. So that's where I came from.
Like, what an extraordinary story and punctuated, underlined. But you see, it goes to that whole thing about integrity, and again, you are what you do every day also. You may be, you show me your friends and your father, obviously a very wise man. And what a great fathering thing to say, if that's English, to help his son get past. I mean, it'd be easy to just go, well, so it was 30 cents, whatever it was in the day. Not a big deal. But to your credit, you understood that and you saw that. And that's just impressive as all get out in terms of who you are as a person. So way to go. Now, you just so we understand this, you work in a different end of the life insurance business at your firm. And I think you've got I know you've got a great story about hunting and how that works. And I think that's really useful for everybody here to understand. Talk about your hunting story.
Yeah, it's interesting. So I think it was 20 years ago or so, Manulife, and they continue to do this, have an elite conference. So when they asked me 20 years ago to present to their independent advisors, and again, I would say maybe 25 years ago, and they asked me to come out and present to 300 or 400 of these advisors, and I'm thinking, okay, there's no one out there that does what I do inside a bank. So I thought Manulife was basically taking me, the lamb, and putting me in front of the wolves and see if I could make it out alive. So as it turned out, part of my presentation was just showing them what I do. Hopefully nothing different than what you do. The key difference is I told them, and I won over a couple of the hearts, is that I hunt in absolutely the best zoo possible, but yet they hunt in a jungle. And the two are absolutely different because they're going to be on their own treadmill. I'm on someone else's treadmill, and they eat what they kill. But I need to go through a gatekeeper to get to those clients. So I would say from a where I say I'm humbled to be even on this broadcast is that I feel and basically in their own words is that I belong, and the stuff that I was doing was good. We do it differently, but I think from my perspective, I felt that I belonged with that group.
You know, it's something that we talked about earlier before we got here today, this idea of hunting in the zoo or hunting in the jungle. And clearly it's a different game. It's a different hunt. But as you've said, you were saying just briefly here, you have a different sales process because you have to make a sale before you can make any sales.
True.
It's not just oh yeah, big deal. So people could think, well, hunting in the zoo, how hard could it be? You know, you set up your equipment and you're in. But it's not like that. Talk to me about the sale you have to make before you can make any sales.
Yeah, the biggest challenge for me, or was, and probably still is to a certain degree, is getting the advisors or the investment counselors to understand the value of having insurance play a role in a client's wealth portfolio or investment portfolio. So they have their own barriers up, meaning some of them don't want to be perceived as an insurance salesperson. That's one barrier. The second barrier is, do we want this other guy in, being me, to potentially ruin the relationship that they already have with their clients? And then three would be like, hey, okay, if this thing works, you're asking me to take $100,000, $200,000, $1 million a year out of my assets under management of this client to fund this insurance policy. And so some of them, would have, and I would say not some of them, but I would say that most of them would have a bit of some resistance to doing that. But the ones that don't, that finally get it, understand the value there, and they're my closest allies.
Yeah, that's still, just to confirm, that really is an issue, isn't it? About, everybody in that business is measured under assets under administration or management, whatever, AUM.
Yeah.
So to reduce that still really hurts. Even if they get it, it's still, if I have 100 million, you want me to have 99 million?
Correct.
That you have to deal with that issue on a regular basis.
Well, it's interesting because they get measured from where they go on trips and what have you, based on revenue, not based on assets.
Okay.
They still care about assets, although insurance will generate some significant revenue for them. But yeah, it's an interesting push and pull. I think what's happening is the firm is doing a really good job, and I've talked about this before, that they've done a good job in the past in preparing the money for the family, but what they're doing now is preparing the family for the money. I think that's so important, and by doing that, that's why they introduce people like myself. They're introducing financial planning specialists, the real estate consultants. So the advisors are slowly coming around to think longer term, and the ones that do are getting the lion's share of the business from the other senses of influences they have.
Yeah. By the way, I want to go back just for something you said. As you know, we've also discussed. This is the words, stories, questions, business, and you just made some. You put some real cool words together. Preparing the money for the family, and then preparing the family for the money. Did I get that right?
Yep.
Can you talk about that a little bit? I think that's really that. First of all, it's rhythmic. It's balanced. It's a great line. What does that mean?
Yeah. So I would say when I first started, everyone was a stockbroker.
Right.
Then they became investment advisors. So a little bit more expanded. Now they're wealth managers. So some still go by the investment advisors. Some will say that they're wealth managers. So what does a wealth mean though? So what wealth means is that you're looking at the client's total picture. And then you're saying, okay, so are they ready to, again, let's look at the model, investment model. We got that. The bigger issue that clients are now coming to us with is we're not sure our kids are ready to receive it. And so part of the language that I speak to with a lot of clients is that from an industry perspective, so you might be asking about the industry, I want us to get out of the beneficiary business and get into the stewardship business. Because once clients' children believe they're stewards of the wealth, that wealth will multiply over time. When they're beneficiaries, the mindset becomes, I'm taking this and spending it.
Take it, eat it. It's all
Correct.
done.
Correct.
Like, okay,
So
so you're just one sharp line after the other here. Slow down a bit. But so the idea of preparing the family. So when you talk about estate planning, it includes preparing the family for the money. Included in
Right.
that, this idea of stewardship. Now, this, of course, most effective at a higher or ultra high net worth marketplace, but still almost everywhere. If you want the nobility in your family to grow through you, then that consideration, stewardship, rather than, stewardship, managing the money while you're here, as opposed to, a beneficiary and, well, how much do I have? Okay, I can blow that by, it's Christmas. That sort of strategy, right?
Yeah. So, yeah, some of the language I use in meetings is who's going to be the steward of this wealth? And they say, where's that come from? Versus the line on the application, which I'm not a big fan of anymore, beneficiary. So I'll just change it. And I'll say, who's going to be the steward of this wealth? And I said, it's part of our responsibility from even a bank perspective to help you speak to your children about receiving this wealth. Because I think a lot of them have come to us and said, well, I'm going to take the Warren Buffett mentality and just give my kids a sliver. Give it all to them, like and charity if you like to. But the only reason why you wouldn't give it all to them is that you haven't prepared them to receive it. Simple as that. Wow.
I think that's very powerful stuff. If you're watching, write this stuff down. This is important because I talk to a lot of people, but we don't talk like that very often. So that idea of stewardship of the estate, man, adds another level to your questionnaires, folks, as you're listening. I mean, that's really interesting. Anything more you can say about that? I'm just interested.
Well, I came out of the Family Enterprise Advisor program, which I took and got my designation. And we went to go see a family in Montreal, and there's 4 kids, and the parents had a distribution company. But the 3 brothers, oldest brothers, were involved, and the youngest one is a daughter, 4th one. She wasn't involved, but she took some marketing programs. Anyways, we interviewed all of them separately. And the daughter had these great ideas that no one was listening to. And so 6 months later, we brought them all together. We were at a hotel in Montreal, and we finally gave the daughter her voice. And it was unbelievable. There wasn't a dry eye in the room. It was just a beautiful, beautiful session. But really getting them to understand that these 4 kids are going to receive this wealth, and we have to listen to everybody because they're ready. We've helped them get ready for this because we've also helped them speak to their parents about their role in the family. And we used like the Venn diagram where we looked at, the ownership of the business, the family, who's working in the business, and they're ultimately, everyone has a different agenda, whether it's heard or not heard. Our job, I feel my job partly is to make sure everyone's heard. And then ultimately, where I'm not making any decisions for that family, I'm just saying, hey, here's your voice. You may want to listen to it or not, but now you have an opportunity to, and then take it from there.
I think, that's a tremendous expansion of the role, of the traditional role you would, by the way, it's odd because on one hand, you would think you would always include this. On the other hand, you were pretty sure not a lot of people include that, which is what really separates you from the average here and takes you into that level of awesome. No, I mean, thank you for that. So what is your business like then? The activity, the kind of business you write, number of sales, calls you make, schedules. I'm just interested in the sort of the
Yeah.
practice management behind what you do.
Yeah, I was trying to, I'll even tell you yesterday was a great day. We had about 7 different interviews with clients or client meetings. And the one that stood out in particular was we're working with this gentleman, and he hasn't bought yet at all, but he's looking at he's got 4 or 5 million in the whole co, looking at putting call it 400 grand a year into this plan. But he says, "Can I have my dad join us for the meeting?" So this gentleman is actually 50 years old. His dad's 73, and so I went through the whole process and I talked about a little bit about stewardship. Like this is perfect, and they do talk to each other, and it's a beautiful family. Well, end of the day, the gentleman says, "Yes, I think we're going to go ahead with this," and the dad says, "Would this work for me?" Interrupted, and I said,
Oh, shucks. I hate when
"Would
that
this
happens.
work for me?"
Yeah.
And the dad's net
Maybe.
worth ends with a B. So he says, "Can you put together an illustration showing me and my wife $1 million a year deposit into the plan?" I said, "Absolutely, I can." So when you talk about wealth and you're talking about stewardship, and then you combine it with some expertise about corporate owned life insurance, I mean, you keep it simple, but you bring all that together, it's magic. It's just so unbelievable. And those meetings, that was 45 minutes. That was a
Yeah.
45-minute meeting, and
Yeah.
we were able to talk about the family, the wealth, the transferring. And I said, at the end of the day, they're not going to spend. And I said, I'm saying to them, I'm projecting this on you, but I don't believe you're going to consume all that wealth in your lifetime. So let's take money from this taxable environment we call our corporation and reallocate that into this environment called whole life insurance. Everything comes out of the CDA, depending on when you pass away, tax free. No other instrument known to Canadians does what life insurance does. Drop the mic, done.
Right.
So that was it. So that's one example from yesterday. But generally speaking, if I can get 6 to 8 meetings per week with clients, I'm happy with that. One in the morning, one in the afternoon. In between that is lunch, which I try not to take alone. I'm always trying to get out with a center of influence.
Yep.
And after work, I'm hitting the gym because there's no other appointments. Then I'll go home because I don't want, for those that don't know, I work in downtown Toronto and the Gardner is a mess. So I leave.
It is.
I will leave down here about 7:30 to make it up to Mississauga by 8:15. But that's my week. We will do over the course of the year, I'll call it 130 to 150 applications, of which a majority of that is term insurance. We don't shy away from the small stuff. We want to serve everybody. And then there's a few large cases. We don't like to hunt elephants because they can go, but we like meat and potatoes. Keep the lights on. Small whole life policies, medium policies, 25, 50 grand a year. They keep the lights on. Yeah, so I just built from there.
Yeah, I mean, I think it's really cool. As you're talking earlier on in this little segment, I was thinking about George Bernard Shaw, who says, "Luck, I don't believe in luck. I find the harder I work, the luckier I get," which is a perfect example of what you're saying. And you're taking 130 cases, a whole bunch of them are term insurance. You go, "Oh my God, you're so much better than that." No, because that stuff can be converted and it can be done. And then and then like you say, you're writing a case. I'll just make this up: a $200,000 premium. And then all of a sudden, it could be a $1.2 million premium based on what dad wanted. And that's because you're there, because you're having the meetings, you're making the calls, you're doing the work. That's impressive stuff and a great lesson for everyone listening. I think especially the number of cases, Barrington, is I think some might suppose that, well, you do 10 big cases, 8 big cases a year, and Bob's your uncle. But you have a concern for consequences in this business for your clients, and that's very impressive. And you can see that in this whole interview. That's always the way you have been and done things. I mean, that's tremendous. Good for you. It's just
Thank you. I remember selling quite a large term policy of, I'll say 9 years ago. And this guy was struggling, a tech guy, and his wife, who was a teacher, was supporting him. And he says, listen, all I can do right now is just a large term policy. And I said, happy, but I'll show you what whole life would look like, once things. Anyways, he went from being worth like 3 million to 60 million. And then he called me, believe it or not, which is crazy. Can we take a look at the whole life policy? So we finally we couldn't convert all of his term. We had to buy more so he could reallocate $250,000 a year into a whole life policy.
Yeah, but you had the base. Worst come to worst, you can do the base. And that's awesome. Now let me ask you a question, because you mentioned that I'm just interested in product selections and that sort of thing. I'm not sure whether that's a good thing or a bad thing, but I do, because you mentioned par whole life, I think, earlier. But you made a swap over from UL to a cash value life insurance, par whole life, for a reason. And I think it's the reason that interests me. I mean, obviously people can argue with you, but that's not the point. The point is you made it for a reason. Tell me about that.
Yeah, it was interesting. So again, I work for RBC Wealth Management, so it's an investment advisory firm. And so I work through investment advisors to meet their clients. Now, when we talked about insurance, they asked me, what types are out there. And I said, there's whole life, there's universal life. And universal life has all these assets, all these choices. That's the one that we want to use, because they thought they knew the markets. And what they didn't realize over the years was they weren't getting statements as regularly as they would with investments. They weren't able to change their options as quickly because statements came maybe once a year, once a quarter, or once every 6 months. And they didn't also realize that when there's a negative downturn in the market, the insurance company doesn't care. They're still taking out the cost of insurance. So all those things led to a couple of mishaps. Some products going offside, and ultimately, when we show the illustrations at 5% or 6%, some days it happened, some years it didn't happen. So they didn't like the volatility of that type of policy because they're already getting that volatility in their investment accounts. So then the switch was made, I'll call it early 2000s. Started looking at par. Only thing we had to then at least have them accept is the black box approach to par. They had to believe that the insurance companies were doing the right thing within that portfolio. And that became easier as most of the investment advisors even changed their investment model to a discretionary model.
Yeah.
So now clients said, okay, just you don't have to call me when you're making a trade, just do the best you can. And it's a black box to the clients until they see their statements. So that became the easier way of doing business.
Yeah, and I think you did you say to me yesterday that you'll even have meetings with some of the people that manage the par accounts with some of your advisors or clients, even to explain what's in that black box or how that black box is managed?
Yeah, I mean, we've had those meetings, and I don't know. I think what it does, it says, oh yeah, there is something behind it. And then as we finish that meeting, the IAs will forget it and just say, okay, now I know there's something behind it, and call it a day. But yeah, we would continue on from there because it gives them, again, a sense of like, okay, somebody's been around since 1865, Manulife since 1887, Canada since 1847. They've been managing this par fund for that long. I guess it works.
Yeah,
And
maybe
so,
they're okay.
yeah.
So,
and the other thing too is that
yeah.
when we put these policies in place, I guess, when I talk about 20 years ago, I had one call three months ago, and it was a gentleman that in 2002, I sold a big policy at that point, $50,000 a year, every year for 10 years. I see him 20 years later because he kept on putting 50 grand a year. He said, you made me my first $1 million. You should get paid more than you're getting paid now. Whatever you tell me to buy now, I'm going to buy more of. And he's like, so he signed up without seeing a new application for $325,000 a year. calls me up again like a month after. He's still underwriting even right now. He says, "Tell me again exactly what we're doing." He says, I told him 325, and it was a big policy. He said, "But I got like $6 million I'm not using. Can we go to 600 grand a year?"
Maybe.
Yeah,
If
sure.
you qualify, if you qualify. Yeah.
Yeah, if you
Wow.
qualify. So to me, it's just it's an easier, because it's a black box and people know it's working. And so this gentleman's known it's worked for him for 20 years. We do review. The policy is like on point, maybe off a little bit because rates had gone down, but he's still like, my goodness, this is so close to being what you showed me 20 years ago. Let's buy more because it works.
So, look, I got a couple of questions here, but it's and we're running. We're got 20 minutes left. But I'm interested in the sales process. You mentioned 45 minutes. Drop the mic. It's not a big deal. What is? How do you explain? I mean, the black box, but how do you explain it in general? Just generally, because obviously you're not going into detail if you can make the sale in 45 minutes.
I'm not, and I actually say to them at the beginning, if you want me to go down a certain rabbit hole, happy to do that. But here's a 30,000-foot view of what we're trying to accomplish here. And again, as I mentioned earlier, a lot of this, so I'll say this was set up by an investment counselor who manages this gentleman's money. She knows that they're not going to use all that capital. Is there something you can do with this corporation to be more efficient? And that's really the beginning of it. So the quantum to what we're going to put in, I have no idea, and I'll tell them right up front. But I'll tell you what I do know about this product is what it'll do for you while you're alive and when you pass away. And here's what it'll do. So again, create some tax efficiencies. You're not being taxed on capital that's now in this life insurance policy. I show them the wheel, which is basically the Sun Life portfolio, how it's invested. I show him also the standard deviations or the lack of volatility in the whole life pool compared to what they do. Now, remember, these people have a lot of wealth. They've taken all the risk in their lives to build this wealth. And I say to them, wrongly or rightly, you probably don't want to take any more risk with the money that you made. So this is another way of showing them in this portfolio. And by the way, it goes tax exempt. And by the way, when you pass away, like all life insurance, pays out tax-free to the beneficiaries in 5 to 10 days. But with your corporation, depending on the date of death or time of death, 100% of that is going to get credited to the CDA and come out tax-free. And then the mic drop is, you will not be able to find any other financial instrument in Canada that will do what insurance will for your corporation.
Yeah.
Drop the mic.
Yeah, I mean, the interesting thing for me, Barrington, is that I listened to you who was doing some substantial, extraordinary business, and I talked to others in the same market, and the similarity among you is extraordinary. And the simplicity among you is also extraordinary, because you keep thinking somehow this has to be way more complicated than this. And if I'm a relatively new person listening in, I'm going, well, it must be something else. And there really isn't. No, you're in the, I mean, I know there's more to it. You got to get there. You're hunting in the zoo. I get all that, but you're in the business insurance market. But what's your focus in it specifically? Because there's something you do.
I think corporately life insurance for wealth transfer. That's the big hairy thing that I try to sink my teeth into. We have a lot of clients now that are going through liquidity events. So that's the biggest thing that we're seeing. But they're not happening at 70 years old. They're happening at 50. They're happening at 40 years old. And we have serial entrepreneurs that we're seeing all the time. So the IAs called me the closer. I like to close business. I don't think or need or believe we should have 2, 3, 4 interviews. My job is to get them to the point where they're not making the first decision. So another point that I say to them, which is also true, is that there's really 2 decisions to be made here. You have to make a decision whether you want to move forward. But before you do that, the insurance company wants to make sure that you're an acceptable risk to put on their books. They don't care how much money you have. All they care about is how much risk they're taking by insuring you. but let the insurance company do their job first, and then you can make your decision afterwards. That's how they start to apply.
Gotcha. Now you have an interesting way of describing the Canadian tax environment, which I know kind of gets you heated up.
Yes.
I'm looking at it here, but I'm thinking, tell me about this whole, like, why are we dealing with this tax environment? Why is it a problem?
Well, it's funny. I use the term egregious, where we are subjected to this egregious tax regime. I feel like I'm a little bit of the Pied Piper trying to get people to, here's one way to minimize. You can't or mitigate it. You can't eliminate it, but we can mitigate it to a certain degree. And so I'm all about ensuring that the wealth that these families accumulated stays in the hands of the families. So it's a bit of a, I don't know, it's a call to action. I feel from my perspective, call to arms, ready myself every morning, brush my teeth and getting ready, and this I'm ready for battle every time I'm going out there. And I always say, God help the person that says no to me. I mean, they don't understand what's going on here. And I welcome accountants to be in the room. I welcome all their external advisors to be in the room to hear the gospel of life insurance through me. I just look at it, and it's like
Amen.
it's a very powerful thing, and that's why I think the industry chose me. I didn't choose it, and I feel like I have a different way of looking at it, but not dissimilar to the heavyweights of the world, like Joe Powell and Tompkins, Cree McConnell's, all those gentlemen. I mean, probably going to go into this too, but they're mentors of mine, and Jim Lackner as well, who's one of the guys that was at RBC early in the days. In fact, Jim Lackner said to me early in the day that more than 0.5% of all the insurance agents in Canada, and that was 25 years ago. But through his teaching, he taught me these things. Bobby Charlton taught me a few things.
Yeah.
And I'll tell you, most recently, Paul Tompkins, we get together once a year at a local restaurant, and he said, "You're like a senior in RBC. You need to put yourself in positions where there's money. That's all you have to do. Get invited to everything." And that's exactly what I've been doing, getting invited to more places where there's bigger money. And so I say to people that are watching, join the right clubs. I belong to the Toronto Club. I belong to a golf course called Redtail. All these exclusive places where
Red tail.
that's
Oh,
Redtail.
we'll be chatting, pal. We'll be chatting. I'll even drive because it's a long way, but I'll drive.
Yeah, so Redtail is my spot. I've been there for like 4 or 5 years, and it's a benevolent dictatorship because you can't buy a membership. You have to be invited back every year. So right now, it's been very good. So I use that to leverage, because a lot of clients that have $1 billion have never been to Redtail. So I do the deal. You go.
Yeah. Like there's so much, like, see, you get in the way of new business. Redtail is a place like that. And I won't say any more than that, because it isn't the place that everybody knows about, but it is a place, believe me. It is extraordinary. Yeah. But you're getting in the way. And I say this to people who are just starting out: get in the way, just show up, be there. Something will happen if you make the little sale. Who knows who's in the background? You're just demonstrating this in spades, Barrington. It's just so impressive. I also keep thinking about how objections are really nothing for a bouncer. But in any event, you were talking about some of your mentors, and it's interesting. How important have they been to you? And frankly, how did you find them?
Well, I think my biggest find was at Manulife Elite Conference, because then they started coming up to me. I don't remember, Tom McQuillan reached out to me to ask me to join a group. I think it was on the Ontario chapter from Canada Life. I spoke to them, and then after that, Tompkins asked me to not join, but be at one of their study groups with Barry Pascal, Don Smith, Peter Crahan. After that, Peter Crahan asked me out for lunch, and I thought that was great. So I just feel like at that point I really belonged, because again, I wasn't doing anything different. We're working in the same circles. They were dealing with clients that had 100 million. I had not seen that kind of client. But yet in the last 4 months, I've worked with 3 billionaires. So I feel like I'm there now and talking to that group. But the mentors were more important from a not understanding a skill, but or understanding technical knowledge, but just to say, the bigger, softer ways of positioning insurance, how to hold meetings and getting out there positioning. It was just that kind of stuff was invaluable. And the
So
other thing that they taught me was
Yeah.
servicing my book of business because you were at RBC Wealth Management and there wasn't anything formal about it, but servicing is another way of selling because you're going back to those clients. To your point earlier, Jim, we got all these 3 years and years. It's an opportunity,
Yeah.
and those guys are masters at that.
I think, you've covered off so much good stuff. And by the way, let's just get something out of the way because I know you keep saying this because you're very humble, which is a very compelling trait in an advisor. But let's just get this straight. You are a legit master in this business. And some of those people are darned lucky you would have lunch with them. So let's get that out of the way because that's the truth. And
Thank
your
you.
whole idea about servicing clientele, I mean, look, this applies whether you're in the marketplace that you aspire to and you keep growing up the ladder. From there, it works, but it works at every single level. And if that sort of service stuff works everywhere, if you're servicing $1 million term case or a $5 million term case, the same kind of good fortune can follow you along if you're still doing that. I'm just trying to repeat the stuff that you're talking about because you were right on point.
Yeah.
In my view, tell me, are you involved in any study groups now, or is formal or informal ones?
Yeah, so we have something called the Breakfast of Champions. So it's interesting. There's one person, like myself, from every bank-owned firm,
Okay.
and so we get together once a quarter. We're usually the top people of those firms, and we talk about what's new. We bring in guest speakers. So we bring in someone from Manulife, Sun Life, Can Life, Equitable, whoever we're working with, and we kind of get into the weeds for 2.5 hours. It's a great session. Sometimes we talk about, and then we talk about each other's families. It's a very good way to say, because again, this could be a very lonely business. And that's why mentors are important, study groups are important. And when I say study groups, it's not just for studying, it's for, just personal and professional opportunities come out of that as well. And again, I don't feel alone when I'm with those individuals. I feel like, again, I belong.
You know what? You can feel that. You can feel that. And again, I go back to it's your part of your style. Barrington is such a. I can feel that you're so grateful to be in the business and so grateful to be able to help. And I just so you know, I can feel that coming out of you. And
Yeah.
that is what your prospects and clients feel. And I'm sure the other people, the gatekeepers and the zookeepers, I think is what you were calling them, the zookeepers in the
Yeah.
zoo, the IAs and that protect you from those clients, they feel that. And that's something else. Look, we're running very close to the end of the hour here, but there's a few things I'd like to talk about if I can. One is, what's your view about the potential of the life insurance business today?
I think, so my manager asks me every year, how much income or revenue you're going to generate? Where are you at your stage of development in your business? And you have infancy, mature, growth, whatever. I always say infancy. I think we're just getting started. And I just don't think there's enough people. And again, I found this industry by accident, or I'll say it chose me. I just don't think we have enough young people looking at this as a career. Because again, I don't think we do a good job as an industry getting the word out, how great it is to solve these bigger problems for clients. And ultimately what we do is we help the wheels of the GDP keep moving. Because if you think about a family business, and the Korean McConnell are a great example of this, they send out these notices every so often. If you don't have life insurance in place, or let's call it liquidity in place to fund either a buyout or to fund a transition, those wheels stop turning. So if you think about what we do and why we get paid what we get paid, I can talk to a cardiac surgeon all day long, but that person's, may save a life. We're saving livelihoods. We're saving communities.
More language.
Businesses, 100%.
Yeah.
So that's the message. That's the message to anyone getting.
And you also dropped in a line, which I would just play with a little bit. You talk about financial liquidity, and it's like like you need financial liquidity. So you're really selling financial liquidity instruments, financial liquidity structures. So you can avoid the word insurance altogether in some ways, at least early on. And but that's just, you're such a master with the words, my friend, a master with the words. And by the way, that pretty much goes back to what you had to say in the Don jail to stay alive.
Yeah.
You had to know what were the words you could say and what words could you not say. So tell me something.
Right.
What advice do you have for those with less experience, in the profession or even outside? But what is there any simple advice you could offer that you maybe wish you had known before?
I wish I'd found a coach earlier, someone that kind of would understand me and figure out, okay, where you should go. I mean, I found out my best lane, if you will, later. I work with Norm Trainer. Everyone probably knows that name.
Of course.
And a couple of guys in his crew. This is maybe 10 years ago. And then I found my relationships are the new wealth, kind of figured who it was. And I built myself into that individual who I probably always was, but didn't actually know it. So finding a coach is absolutely important. And then having a mentor and a study group, those three things: mentor, study group, and a coach, personal coach, will take you places that places that I couldn't believe I was in and never dreamt I would ever be. But that's a great lesson, just finding those individuals.
And I think what you've shown, what you've said here today really means that you are this person, and what your experiences, the coaching you had, the mentors you've had, the friends in the business have kind of cleared away the stuff that holds you back from being the very best you can be. And I love what you're saying about just your business, everything is just in its infancy, because there's so much more to go on. Now, Lawrence is going to be on in a second here, but I thought one last thing to you, if I can, before I hand it back to Lawrence. Is there anything that we have not talked about yet that you'd like to discuss? Is there anything that's out that we haven't said that you said, oh boy, I wish she had mentioned, or let me say this?
Everybody else, no, I think honestly, this is time so well spent. I've learned through you, Jim, that the passion for what I do is just getting better, and it's my fire is still there. I get so excited about this business. I just can't wait to do more. I said to my son last night, I said, I'm so incredibly lucky to be in this world and doing what we're doing. And how we're doing it is just, we're helping so many people, adding value to their lives, and in turn, I'm adding value to my life. It's just, I would just end on that. It's just an incredible opportunity to serve people and do what I do, my man.
I gotta thank you very much. It's an honor to be in conversation with Barrington Gray here from RBC Wealth, extraordinary professional, and it's been my honor and our honor to hear your story. Back to you, Lawrence.
Thank you, Jim. Thank you, Barrington. Barrington, there's a question from Denise Lesiak, who says she knows you.
I know her.
And she says that she agrees with the inherent value of relationships being key to doing great business together, but she wants to know, or she wants you to speak to, the importance value of transparent relationships between an advisor and an underwriter. And how do you best foster the nature of those relationships?
That's a great question, and I've been able to develop, along with Denise, some great relationships with underwriters. So the transparency comes from, again, for me, writing a lot of business over the years, so the underwriters can see the type of business that I'm writing, and we'll have conversations about that. So the more we can converse about, again, the type of clients that are coming, I'll call it from RBC or from Barrington Gray specifically, the better opportunity that they'll get comfortable with me and I'll get comfortable with them. The only thing I will say about underwriting, and Denise will know this, is that we don't have a lens into the reinsurance world. So we have to really trust the underwriter best judgment as to say, should we shop this to the reinsurers or should we retain all that? So I think just open, honest communication and actually seeing each other, which Denise wrote, long overdue.
Great advice. Thank you very much, Barrington. Thank you, Jim Ruda, for doing the interview today. Barrington, it's been a real pleasure to meet you and to have you here with us. Next week, we have Susan St. Amand speaking about the financial, I'm having one of those days, FEA, Family Enterprise Advisors of Canada. And Susan is, I believe, very, very involved in that. She'll speak with it as well. Thank you for joining us. We'll see you next week, Thursday at 11 a.m. for Meet the Masters of Insurance.